Hello everyone, I am Raj from EPK Capital. At EPK Capital, our core philosophy is simple yet deeply profound. We build wealth for generations. Today, I want to talk about an economic force that affects every single family, every single business, and every single portfolio across the globe. It is a quiet, relentless force that operates in the background of our daily lives, and I like to call it the invisible thief. I am talking about inflation. Think about your life just a few years ago compared to today. The price of a simple basket of groceries, the cost of filling up your car's fuel tank, the school fees for your children, or even the price of a family vacation. Everything has gone up significantly. Inflation is the quiet process of your hard earned money losing its purchasing power. If your wealth is simply sitting in a traditional bank savings account or standard fixed deposits, it might feel safe. But in reality, that money is shrinking in terms of what it can actually buy for you in the future. To build wealth that lasts for generations, we cannot just save, we have to protect. And one of the most time tested, historically proven shields against this invisible thief is an asset class that many modern investors overlook: commodities. These are the foundational physical building blocks of our global economy. And today we are going to explore how they can protect your family's financial future. To understand why commodities are such a powerful shield against inflation, we first need to look at why they move so differently from traditional investments like stocks and bonds. When you invest in a stock, you are buying a piece of a business, which is essentially a paper asset. The value of that stock depends on company profits, management decisions, and market emotions. When you buy a corporate or government bond, you are lending your money in exchange for a fixed interest payment. But commodities are entirely different. They are tangible, real world physical assets. They are things you can physically touch, weigh, eat, or burn for energy. We are talking about things like gold, silver, crude oil, copper, wheat, and coffee. Here is the simple reason why they behave differently. When a government or a central bank prints more paper currency, the value of that money goes down. Because the money is worth less, it naturally requires more of those paper notes to buy the exact same amount of real world physical goods. Therefore, when inflation goes up, the prices of commodities naturally rise along with it. While high inflation can hurt corporate profits and cause the stock market to experience wild and scary drops, commodities often thrive because their value is rooted in real world scarcity and daily human utility, not just economic optimism. Let us begin with the most famous universally trusted commodity of all time, which is gold. Globally, gold has been recognized as the ultimate safe haven for thousands of years. When geopolitical tensions rise, when financial systems shake, or when major currencies begin to lose their footing, investors all over the world instinctively run toward gold. But here in India, our relationship with gold goes much deeper than just financial charts and statistics. It is a core part of our culture, our festivals, our weddings, and our family legacies. We instinctively understand that gold represents ultimate financial security. From a professional wealth management perspective, you should view gold as a form of financial insurance for your entire portfolio. It does not pay you a monthly rental income or a corporate dividend, but it performs a vital function. It preserves your purchasing power across decades and even centuries. Think of it this way: a specific weight of gold that could buy a high quality custom outfit 100 years ago can still buy that exact same quality of outfit today. Paper currencies simply cannot do that. By maintaining a thoughtful, strategic allocation to gold within your family wealth plan, you ensure that a vital portion of your core net worth remains completely safe, no matter what happens to global banking systems. Now, let us switch gears and talk about a very different kind of commodity that moves the world every single second: crude oil and energy. Oil presents a truly fascinating paradox for investors. It is not just a shield against inflation. Very often, sharp spikes in oil prices are the actual cause of widespread economic inflation. Think about everything around you right now: the smartphone or computer you are using, the food on your table, the furniture in your room. All of these things had to be manufactured in a factory and then shipped across oceans, railways, and highways to reach your home. Every single stage of that process requires an enormous amount of energy, which is predominantly powered by crude oil and natural gas. When the price of oil rises, Due to global supply shortages or political events, the cost of manufacturing and shipping goes up for every single business on earth. To survive, these businesses are forced to pass those costs on to you, the consumer, by raising their prices. By including energy assets or energy focused investments in your portfolio, you effectively flip this challenge to your advantage. Instead of just being a consumer who suffers when fuel prices go up, you become an investor who benefits from that rising value, turning a major economic risk into a protective shield. Beyond gold and oil, there is an entire world of what I like to call the silent gainers. These are industrial metals like copper and silver, alongside agricultural commodities. Think about the massive structural changes happening right now, especially in a rapidly developing economy like India. We are building massive infrastructure, upgrading national electricity grids, and moving toward green energy and electric vehicles. Did you know that an electric vehicle requires up to 4 times more copper than a traditional petrol or diesel car? Or that massive solar panel farms require thousands of kilograms of silver to conduct electricity efficiently? This means that as the world modernizes, the fundamental demand for these physical metals is growing rapidly. The same logic applies to agricultural commodities like wheat and coffee. No matter what the stock market is doing, the global population still needs to eat and live. These items have a real, undeniable utility that humanity cannot live without. When inflation causes the cost of mining metals or farming land to rise, the market prices of these goods naturally adjust upward. They act as a quiet, resilient engine of growth inside a diversified portfolio, anchoring your wealth to real world necessity. As someone who has spent over 20 years managing wealth for families, it is my absolute duty to provide you with a complete, honest, and balanced picture. Investing in commodities is not a one-way street to easy riches, and it certainly comes with its own unique set of rules and risks. This is our necessary reality check. First, as I mentioned earlier, commodities do not produce organic income. A bar of gold in a vault or a contract for copper will never send you a quarterly dividend check or deposit monthly rent into your account. Its value is purely based on what someone else is willing to pay for it in the open market. Second, commodity markets can be incredibly volatile in the short term. Prices can swing sharply based on unpredictable events like sudden weather changes affecting crops, unexpected political trade wars, or rapid shifts in government policies. If an investor makes the mistake of panicking and putting 100% of their money into commodities, they are exposing their family wealth to an intense emotional roller coaster. True, professional wealth management is never about chasing the latest hot trend or placing a massive bet on a single asset class. It is about strategic balance. Commodities should be viewed as a stabilizing anchor, a protective layer that works in perfect harmony with your stocks, bonds, and real estate. So, what is your actionable blueprint moving forward? How do you actually bring commodities into your investment strategy safely without having to store physical bars of gold under your mattress or keep barrels of oil in your carriage? Fortunately, modern financial markets give us incredibly secure, liquid, and convenient ways to do this. You can invest through low-cost commodity exchange traded funds, known as ETFs, which track the prices of these materials digitally and can be bought or sold instantly. For gold specifically, here in India, sovereign gold bonds are an exceptional tool. They give you the exact price appreciation of gold, plus a guaranteed annual interest payout from the government with absolutely zero storage worries or purity concerns. The key takeaway I want to leave you with today is to look closely at your current investments and ask yourself a serious question. If inflation remains high over the next 5 to 10 years, is your family's wealth truly protected? A resilient, multi-generational portfolio requires a thoughtful mix of assets that can survive different economic seasons. At EPK Capital, this is exactly what we specialize in. We look far beyond the daily market noise to build custom investment structures designed to stand the test of time. If you want to explore how to safely integrate commodities into your personal financial blueprint, our team is always here to share our insights and guide you. Thank you for your time today. Stay invested, stay smart, and remember that real wealth is built for generations.